Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 9th of October 2018. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Right, let's kick off as ever with a look at the overnight changes and price moves to be aware of. We had 3 holidays yesterday in the US, in Canada and in Japan, so it was a pretty quiet session as you might expect. A few things to flag up though. First of all, some pushback from the Aussie dollar, gaining 0.15% back against the greenback after what's been a torrid couple of weeks for the Antipodean currencies. The Indian rupee though, its problems continue to mount up. It was down another 0.4% against the US currency yesterday, and now it's down around 13.33% over the course of the last year. Dollar index, for its part, broadly unchanged, 95.72 trading shortly before we recorded the video. That was down by 0.04% over the last 24 hours. Okay then, what's on the calendar? Events that may move the markets today. No high impact data per se to speak of, but plenty to keep us busy today. We've already had business confidence and business conditions data out of Australia for September, and better reads than expected there. And a similar story from the Japanese Economic Watchers survey for September, both on the outlook and current conditions surveys. 51.3 and 48.6 the reads there, and again both better than the forecast. So to come at 6 AM GMT, we will have trade balance and current account data out of Germany for the month of August. And then at 8:30 we switch across to London for the Bank of England's Financial Policy Committee statement, and a chance to look at the finances of the Bank of England and the state of play in the UK financial markets. At 10 AM we're across the Atlantic for an early data release from America in the shape of the NFIB Business Optimism Index for September, and that'll be followed at 12:15 by housing starts from Canada for the month of September. At 1400, the Fed's Evans will give us the first of the day's central bank speeches, and that's followed at 14:35 by MPC member Broadbent speaking here in the UK. We'll have a series of bill auctions from the US. That's 52-week, 4-week, 3-month and 6-month bill auctions at 15:30 GMT today. And then we're back across the border to Canada for a speech from the Bank of Canada's Governor Wilkins. At 21:45, we're halfway around the world to New Zealand for the electronic card retail sales data for the month of September. And we hop over to Australia at 23:30 for the Westpac consumer confidence data for the current month, i.e. October. And then at 23:50, the pick of the day's data releases, I think you'll find, is Japanese machinery orders for the month of August. Okay, breaking news and comment then that's caught my eye overnight. And first of all, US Treasury yields have continued to rise, with the 10-year bond yield hitting fresh 7-year highs in Asian trade. Meanwhile, the IMF has reduced its global growth forecast for 2018 from plus 3.9% to plus 3.7%. And perhaps more interestingly, it has trimmed its US 2019 growth forecast by a similar amount to plus 2.5%. That contrasts sharply with GDP levels that we've seen in the US of over 4%, of course, in the current year. Okay, well, the sell-off in Australian equities has continued overnight as they have fallen to a new 16-week low, and the summer's gains have all but been erased over the last month. So a big pullback ongoing there in the Australian equity market. Right then, food for thought, something to think about and take away with you into the trading day and beyond. And why not think about this? As of Friday morning last week, the US 500 index was just 1% below its all-time highs. But it was a very different picture for many other equity benchmarks around the globe. The table here we can see shows country ETFs, including the US 500 index here, and you can see a wide dispersion in the actual performance, really playing out this view of a non-performing binary outlook for the markets, the US good and everything else pretty much bad in the eye of investor. But surely at some point the worm will turn and there will be a rotation out of the US and back into some of these what look like oversold markets. Okay, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please contact your Pepperstone account executive. But please also take a moment to read this risk warning thoroughly. Thank you for your time.